Yeah, I'm losing my
And it's so
edge.
nice to talk with traders who are trying the products or have trading ideas. I mean, you and I are both traders, so it was great being at the expo and shooting ideas back and forth with people. And it kind of segues nicely into hopefully, what we'll be talking about today, which is a question I used to get all the time because I'm 24. I don't have $1 million, though I wish I did. I'm trading with a pretty small account. And I think a lot of people would either see themselves in me or have some of these questions if they have
Absolutely.
a child who wants to learn how to trade. Hey, what do you do with a small account? How do you actually trade a small account or even get started just to participate in markets?
Absolutely, Mike. And you're right. I think it's important for us to realize that we all are, one of our great constraints in trading is capital. We want to use it effectively, efficiently. We want to have an appropriate set of occurrences, and we also want to have diversification. Challenging all those wonderful statements that seem to be perfectly logical. Yeah, I'd like to diversify my portfolio. I'd like to have a number of different trades on, some with differing opinions. Well, the greatest constraint on doing that is your ability to deploy those trades. So trading a smaller account is where so many of us live. Using it effectively and getting the most out of our capital in terms of a return on capital and accomplishing some of those goals is the challenge. And this should be a great segment addressing that.
Awesome. Yeah, let's jump into it. And I think the data is particularly interesting, especially with these times right now. You look at the stock market and sometimes you almost forget. I mean, I look at daily price candles, sometimes even shorter time frames if I'm scalping. But taking a step back here, we're looking from January 1992 until present. This is the SPY, the S&P 500 ETF. Just look at the tremendous, almost dare I say, exuberant growth in equities. We're seeing prices I've never seen before. The highest levels we've ever seen. I know you and Frank had talked about quoting Nasdaq now has almost become a verbal challenge given the price is so big.
Yeah, you know what? I mean, this is huge by any standard, whatever way we want to grade movement. And I think from a trading standpoint, looking between 92 and '08, taking out that '08 housing crisis seems like such a tiny correction
Yeah.
versus some of the movement we've had. But the amount of movement that we've compressed over the last, and let's just even call it 7 years, has truly been amazing. And for me as a trader, uh, always having a mix of contrarian views and some momentum views if I'm using static deltas. Uh, Anywhere along this line, well before we reached 350, was expensive and would have been, um, in my mind, an interesting scalp. Some of them might have worked if your scalping expectations were realistic. Well, were constrained, but the risk in terms of movement to the upside here has far outpaced anything. I don't want to say it's reasonable because the market is what the market is. The market goes there. How long it stays at these levels? Right now, it's reasonable. Markets are priced incredibly efficiently. So, how do we tame some of this beast is an interesting question. And I think will continue for us to ask, not just in the next 30 days up to the election, but for the next several years. So this is a great time to talk about expensive assets and how do we find efficiency and the ability to trade them.
Exactly. We do have to adjust with the times, right? We can't go back and say, "Oh, I remember the golden days when
Right.
it was 100." But it just leads me to start thinking, shares are just more expensive than they've ever been. I mean,
Right.
in that sense, the cost of participating has actually gone up. You think about some of the most popular equities that are traded, everyone talks about Tesla, everyone talks about Apple, and take a look at those share prices. Granted, they just split, I think, 2 weeks back, 7 for 1, and I think either 5 or 4 for 1, respectively, but still a pretty steep barrier to entry, especially when you look at the margin requirements to purchase equities or to short sell them, which can even be more expensive sometimes. You're putting up that full $445 or that full $100. If you're fortunate enough to have a margin account, you cut that in half. But the pay to play, I mean, I remember when I started trading stocks in high school, I was just really gambling on penny stocks. Uh, that was cheap, right? It wasn't a great way to play, but it was a way to participate. Even now, some of the most popular names are out of reach for a lot of people without even touching the argument of fractional shares, which I think is a whole nother case. But it's really it's kind of the same, right? There's no.
I think it is, Mike. You make a great point is that, yes, assets are so expensive, whether now we've come off a $2,000 goal on $30 silver, but still, especially in the equity side of the world, assets are incredibly expensive. And you mentioned the point of fractional shares, and you would think, well, you guys are talking about getting small. You're the small exchange. Doesn't that kind of cut into your business? No, I think it validates what we're doing in terms of there is a tremendous. Where's the greatest growth? It's been at that bottom piece of the opening markets to a much larger audience. So whether it be fractionalized shares, where we've seen such tremendous growth in companies offering fractional shares, and the amount of participants taking that up because of the struggle in adopting a traditional, let alone 1 share or 10 shares of any of these stocks, and the capital required. So this is definitely the area where getting smaller, and you know what, traders are smart. They realize that with a finite amount of capital, overexposure to one single idea or underlying is dangerous. And the ability to gain diversification, like we talked about, is powerful.
Yeah, in addition to that too, Pete, I think it's more than just investing passively. I mean, if you want to put $10 into Amazon, that's fantastic. I think that's a great start for a lot of people. But there's something to be said too for the value of participating in markets and being engaged. And when you read something in the news or you hear about an event and you see it play out in equity prices, in market prices, you know why gold is moving a certain way. We've seen some pretty big moves in agricultural products recently. Why is that happening? It's kind of it's a fun way to participate in the world and be like a holistic person. So investing $10 in Amazon, great. It's a nice learning experience. I think you learn so much more by actually buying and selling and making a movement based on your opinion in an underlying. So there's definitely something to be said there, and fractional shares help, but I think there's a better way, and that is small exchange futures. So just taking it a step further, you can't eke out any additional performance with fractionalized shares. If you have a car that goes 500 horsepower, maybe you eke out a little more by changing the muffler or tuning it or whatever you may be. You can't get more efficient with fractionalized shares, unfortunately. A dollar will always be a dollar. Where you can get some performance benefit is with small exchange futures or just futures contracts in general. And what I mean by that is the cost for exposure. So we talked about Tesla, you're putting down 100% of the capital. Apple, you're putting down 100% of the capital. Fractionalized shares, 100% of the capital. Take a look at small stock 75, 10% of the capital required. And that's due to the actual structure of the futures contract. So for a more efficient dollar, smaller traders may consider smaller futures as opposed to smaller stocks or fractionalized shares.
I think, you know what, Mike, you hit on a great point before, is that we learn by doing. And unfortunately, we probably learn most by doing something poorly. And what I mean is by losing, but the engagement back and forth is how we all learn. 10 years ago, paper trading on a sim was incredibly popular. We always joke there's some guys who never came off the sim. Now, it was the start of engagement around product, but I think anyone who's traded in the sim environment knows that the takeaways and the learning are very limited. They're not really practical in terms of applying them in a real dollar world. So the idea here of buying Tesla and looking for a $20 move on a single share and pulling $20 out is a challenging piece to truly build a number of occurrences and a learning curve. So the more we do, the more we're able to do in terms of tradable ideas back and forth, the quicker we learn, the more efficiently we build strategies and mechanics. It's tough to do around when I'm looking for $3. And at $3 is the goal. The back and forth isn't there. The ability to trade isn't as easy to do. And what I'm posting to make $3 or $20 is challenging. I think when you talk about that move in the small 75, you can participate in so many different unique prints of the day, and actually working on that dollar tick is incredibly efficient and much more consumable for such a larger audience. But there's enough back and forth to make that an interesting trade, to hone your skills, to build them without getting run over. And I think it fits nicely between the basket of fractional shares. And again, we don't discount anything. Any new product is an interesting opportunity. We weigh the benefit, we weigh the cost. And I think we want to find, and I think we've done a good job at the small exchange, is finding that sweet spot between size and movement.
Yeah, you're spot on, Pete. I think you make a great point too about feeling. I'm a big fan of Nassim Taleb, who writes pretty strongly about skin in the game. I mean, you're $10 in, or actually, let's just take the first example here. You're $445 in Tesla, moving $20 a day. You might feel that, and you may pay attention to it, but I think you're going to have your eyes on the product. You're going to stay a little more engaged, a little more active. You're going to be forced into making a decision when you're trading something that's actually moving a little bit more, and it shouldn't be uncomfortable, but I think you'll have a reason to look at it. There's an opportunity there. Whether it's winning or losing or deciding what to do when it moves against you or what to do when it moves with you. And I think that's certainly worth something. I can remember in college, one of the greatest things we did was we actually managed a portfolio of money. And it wasn't simulated funds. It was an actual equity portfolio, part of the endowment. We invested it in stocks. And then we launched a treasury fund as well. There's nothing quite like managing your own money in that sense, or that was someone else's money. We didn't get paid to do it. And
but
for educational purposes.
You felt every move. We managed money in a CTA, and it was interesting because my swings, you kind of live with your own consequences, with your own money. When you're trading somebody else's, it's actually a very different world. And you're absolutely right that responsibility around that opportunity is tremendous, but also the learning around it is incredibly powerful.
Yeah, $3 move in Apple on a daily basis. And I'll just set some background here. So this dollar daily move column is the one standard deviation move in that underlying product. So Tesla moves about on average $20 up or down a day. Apple about $3 after the split. If you're trying to trade around Apple, putting up $100 and it's moving, 75 cents or $1.50 either way, you don't feel it, I guess. It's not as nearly as engaging. You're like playing an old video game like Pac-Man 1980 as opposed to some virtual reality thing in 2020. So that's just my take on it.
Don't be dissing Pac-Man or Donkey Kong or any of those things I grew up on. Unbelievable.
They're nostalgic, and they have a place. Yes. Actually, a lot of places now, like Emporium here in Chicago, a lot of local bars, they still offer those games. So something to talk about, certainly. But why might someone trade smalls as opposed to SPY, for example? Well, I think one piece is the capital efficiency. We talked about extending the dollar. But the other piece is the exposure is pretty similar. So it's just a little more active in something like small stock 75. I mean, you're looking here at the performance of the two against each other. Small stock 75 traces pretty darn close. But what's nice is you have little spikes here and you have little spikes earlier up here, which present kind of a different opportunity for the active trader. We talked about scalping a little bit. That exists more in a product that considers volatile stocks and big stocks that move around than a 505 constituent index from, I don't know, what is it, the 1800s or something, the S&P 500? So I think it helps aid with your learning in learning how to trade and engage with a smaller account.
Right. And, I think all of us have you know, we run through periods where our strategies are working and we're executing mechanically, and other times where the strategies are not working. And we are, when those moves get you to an uncomfortable level, the mechanics instantly break down, and then the pace of loss becomes disheartening. You tend to stop learning, and it really takes you away from the opportunity. So I think it's really important, and you make a great point here, Mike, is tradable opportunity gives you a number of occurrences. Each occurrence is a learning moment as long as it's a consumable amount of movement. We know, nobody makes money 90% of the time or 80% of the time. Our goal is to, in a longer term, be consistently profitable, or at least, and this is something that took time for me, lower the variance of when you're up and when you're down. That's an incredibly powerful tool. And one of the ways to lower that variance is to lower the amount. It seems so simple to say, but using a smaller size product lowers that variance, and that gets you into a much better place.
Yeah, you almost have a little bit more flexibility, right? You can set your entry and exit points the same way you would trading any other product, but you can manage them a little more tightly. One thing I love about small exchange products is, in particular, is being able to put on a few contracts. And then if you hit a profit target, maybe peel off one or two, you leave one on to run. There's a lot more, I would say, flexibility with that capital efficiency and with the size of the product. It's not like, I guess when I was first starting trading, I traded some of these bigger futures contracts, and I felt like I would cut my profits too early, or I
Sure.
would cut my losers too early. I think we've all experienced this. Oh man, I wish I had just let this thing ride. You never know. Of course not, looking back in retrospect, but with a smaller contract, maybe you leave one on. You take one off. You just be a little more dynamic and new information as it's coming in.
I think that's a great point. Starting with one is a great place to start. The ability, though, to not make your strategies binary. And what I mean by that is that I can only trade one unit of this product. So I'm either long or out, or I'm short or out. I can't be nuanced long. What I mean by that is, even if you're trading two and you find that your strategy is successful, and you want to take part of that off and let the strategy play out, you're able to do that. So if you think about that in terms of units, it doesn't mean you immediately need to go two, three, four, or five, but the ability to manage that exposure, especially in the world of static deltas, think about the expansion of your toolbox to do that. I mean, it really is material. So we have to gain that additional tool, and the best way to do it is by finding a smaller product that lets you start to employ some of those strategies where you can be less long, and rather than just I'm only long or short and that's my only choice.